Okay, welcome all to today's webinar. So today's webinar is the fifth in a series that Centricity Capital Partners has been running for the last 3 or so months, and we are pleased that you are all able to join us today. So today's topic is going to be what will successful businesses look like at the end of this crisis, and to discuss this topic. We will be having our Group CEO, Centricity Investments PLC Group CEO, Dr. James Moria, to take us through. But just before we begin, I'd like to just make a few comments. So the webinars are being run by Centricity Capital Partners. Centricity Capital Partners is the private equity arm of Centricity Investments and has its own corporate governance, a separate governance structure. Being part of Centricity Investments, which is East Africa's leading investment company, has enabled obviously Centricity Capital Partners to be at a point where it's able to see what is happening to a lot of businesses, but not just to see that in terms of opportunity and what is happening, but also to execute a lot of these ideas and items that we're talking about within our businesses. So to get us started, I just want to go through a few housekeeping items. So we will be sharing this presentation at the end of the webinar today, together with an audio clip for the same. We will also be recording it, and then we will also be taking your questions at the end of the sessions. Please feel free to send your questions during the course of the webinar. We have a question tab on your right. Please type the questions there, and during the Q&A, we will endeavor to ensure that we answer the questions. As part of the panel, we have the three Centricity Capital Partners who are joining Dr. James Moria, the Group CEO, for this webinar. So with us today, we have Fred Morimi, the Managing Partner of Centricity Capital. We have Thomas Omondi, who wears a dual hat, is the Group COO and is also a partner at Centricity Capital Partners, and myself, Wambua Kimeo, I'm a partner at Centricity Capital Partners. So to get us started, I want to hand over to Dr. James Moria, who doesn't need any introduction, has been with Centricity for a long period of time, and I think everybody knows him quite well. So Karibu, Dr. James Moria.
Thanks a lot, Wambua, and good evening, everybody. It's really a pleasure to be here today to discuss with you and what we are seeing and what we are doing. In the times we are facing are truly unprecedented, and I think it's times like this when you need a very strong and sort of innovative leadership that you're able to respond to the situation. So I'll take about 20 minutes to share with you what we are seeing and what we are doing. We have a diversified portfolio. We've been sort of on the rock face of dealing with some of these challenges. So what we are sharing with you is some of the ideas, some of what we're implementing at a portfolio management level with our different companies. Different businesses have had challenges of varying levels. And I think I didn't want to delve too much on the challenges. I think we all know what challenges we've gone through. But I think if you look at the business structure, our challenges have impacted businesses largely in 4 buckets. One, there's been pressure on revenue and margins, largely because of demand. As one, consumer confidence has come down. 2, there's been restrictions. 3, some of the channels that businesses sell through have been closed. The net result of all that is that we are seeing challenges in demand. There's been, I think it was most challenging in April. And in May and June, we've seen some improvement, particularly in June, but still, we are not where we were same time last year. I think the second major area is the route to market. A lot of our companies have built a route to market over a long period of time. That route to market has been disrupted. For businesses where you are relying on informal trade, these are Dukas and the rest, a good number of them have closed. And there's a risk that many may not reopen. We've seen consumers changing their channel preferences in favor of digital channels. So there's been a disruption, and even as we reopen, there'll be a greater degree of compliance that will be required. I think the third area of pressure has been on liquidity. Liquidity both in the balance sheets of the companies. A lot of our businesses, and I'm sure many of you, the major source of your inflow is customers paying you. And as customers come under pressure, then you find that your receivables are going on for a lot longer. That's one area of stress. The second area of stress is the ability of consumers to afford the product, and that then affects the throughput of your sales. A third area of stress is ability of your suppliers who are part of your supply chain to fund their businesses and therefore to supply you, and therefore you have to deal with those three issues. The fourth area now is the health and compliance issues that come with it. If you look at a number of surveys that have been done, the market is still people are very concerned about their health. We are reopening, we've seen various healthcare guidelines coming out. It means as business, in addition to all the other issues we had to deal with for the foreseeable future, until there's a vaccine, we have to continue dealing with the health guidelines related to COVID around our businesses. And it would appear it's not just around our businesses, but around the businesses in the route to market and the businesses in the supply chain. So those are sort of the four broad areas that we are now thinking about and addressing. So what does success look like, in this environment, and what we've defined for our portfolio companies, what we are shooting for, because we all had strategic plans pre-COVID. We've sort of put those strategic plans aside for now and said, okay, look, you need to remain profitable. That's one focus. Number two, even as you cut costs, we don't want to lose core capabilities. So there are certain core capabilities that enable us to serve the market, that enable us to innovate. If you remain profitable by cutting those, then we'll not have won. We need to retain those capabilities. Three, we need to retain consumers, because businesses exist to serve the customers. But then secondly, we need to figure out ways of winning new customers, because customer preferences are changing. For some of our export business, we've seen as the supply chain preferences of the customers change, there's an opportunity for you to acquire new customers and therefore win new business to replace what you've lost. Number four, you need to maintain your relationships with your financiers and your suppliers. So that's sort of what our picture of success looks like, at least for this period. So what are we doing to organize ourselves? What we've seen is customer centricity. A lot of the time, it is easy to be inward looking and say, what is it that I'm doing within my business? But it's important to understand where your customer is and what are the changing needs, and how then do you structure your business to serve the customer at their point of need. There's been a change in terms of the price point of affordability, in terms of the product, the packaging or the sizing and the rest. Some of them have changed the channel of delivery, and therefore it is us responding. And I think you've seen some of our portfolio companies, just to give an example, say Longon, switching to go onto digital platform. The product has changed. It has moved from a physical textbook to a digital textbook. The channel is changing, and that is applying in a whole range of businesses. Then what is important to the consumer? Those are some of the things we are sort of dealing with. But it's about our businesses being flexible, because the customer is unlikely to change given what has happened. So the key focus is, what can we do that is in our circle of influence? Because the COVID environment, the economic environment arising out of this COVID situation is what it is. So the key thing is to win even in this environment. Now, if I take the 4 points, one, what we are doing around demand. So there's been demand disruption. Demand disruption is putting pressure on revenue. The biggest source of cash flow for the businesses is revenue. And so that is the key thing we need to protect. So again, some of the businesses, we are looking at the packs, looking at affordability. Second thing, asking ourselves, and when we sit with management, saying, are there new markets? Are there new customers we can serve? And again, we are seeing emerging opportunities, because again, because of the recalibration in the marketplace, the competitive landscape is bound to change, and therefore there may be emerging opportunities. Number three, are we losing revenue because of route to market disruptions? So when we think about working capital, it's not just about the working capital support for our business, but what is it that we can do to organize our banking partners to support our customers with working capital financing. So you may have seen, as an example again, in today's newspaper, a partnership between Isuzu Motors and one of the banks to provide working capital support to customers who are buying Isuzu vehicles and giving them a 90-day sort of moratorium on payment. So one has therefore to be proactive to then make those sort of arrangements on behalf of their clients. And for some others, even you have to go backwards to your supply chain partner and say, what is it that I can do to support my supply chain so that you are running an uninterrupted service? Fourth is really looking at the whole process and seeing how do I cut out waste, because price certainly is critical, and there may be some activities that we had in the chain that are not, the customer is not prepared to pay for them. And therefore, when looking at the cost rationalization decisions, then using that as a criteria. But I think the fifth point, which is important, is a mindset, the mindset, because if you're in the mindset that there's no business and there's no market, then you're most likely going to do nothing. And something I always remind myself and remind my team is that even today, in the midst of all these challenges, we are talking about a reduced growth. If you read the papers, I think Business Daily today or yesterday, they were talking about Q1 having had a low growth. We don't know how Q2 will look like, but you still have a sizable GDP, you still have a sizable market. So there's a market. So having a mindset that there's a market, there are transactions out there, and I need to capture them is critical. We're looking at our real estate business, for example, and that's one of the business at the beginning of COVID we expected to be very hard hit. But you realize that even in the COVID environment, you're still doing sales. So it means there's a market out there. And it's you just being aggressive and staying in the market and saying, look, whatever transactions are going to happen, I'm going to win with those transactions. So those are some of the things we are doing and supporting our portfolio companies around the demand disruption, whatever is happening on demand. Now, the other critical thing is route to market. Now, route to market for a lot of businesses, although we have Kenya, we are big on digital payments. The bulk of the route to market is still very traditional. You are relying on formal trade, which are the supermarkets and the rest, and largely informal trade, the dukas and other sort of outlets. Now, with the lockdowns and the restrictions, a lot of these have closed down. And so you have businesses which have taken years to build a route to market, which is suddenly under threat. And some of it will open, some of it may not open if we do nothing. And so what we're then seeing and we have to do is also working with our portfolio companies around working capital support for route to market to ensure that your existing channels can open, but then to support those channels to access their customers on digital platforms, because a small duka may not be able on its own to get onto a digital platform. So it is upon us, all of us, sort of to work with our existing outlets to support them. Then you have the health concerns and the compliance issues arising from the health issues. Again, it's thinking how you can support your route to market to comply. So there's compliance, there's the sort of whatever you need to do from an information perspective, and that is critical. Then there's a lot of work also going on interfacing with county and central governments around seeing what can be done so to make it easier for businesses to operate, because you're relying on the whole ecosystem of SMEs, and those SMEs are, one, our customers of a lot of businesses. They are two, suppliers. So they are critical to the to the supply chain, and then of course three, a lot of them are the route to market. Now, number three is something that we've been looking at, and this is something we started looking at immediately COVID began, is then critically looking at the cost structure of the portfolio companies and seeing what could be done to shift the cost structure to reduce fixed costs, to reduce the ratio between fixed costs and variable costs. Because the challenge you have is where you have declining sales and possibly pressure on margin. If you have a very high fixed cost structure, then you start losing money. And you lose money even when you're in business. And now, if you don't change the structure, then the only way you save money is to reduce the business activity, which means then you lose revenue. Now, when you lose revenue and lose customers, then you have a structural problem, which will be very difficult to fix. So what we've been looking at is not just cutting costs, but also changing the structure of those costs so to see what costs can move from fixed to variable costs. So even when engaging with staff around salary reviews, is sort of changing the structure so that you have a lower fixed portion, another portion that is tied to sort of business performance, and ultimately to ending up with a model where you have a higher variable cost element, which sort of moves with your cost of sales and your gross profit. And so then you can withstand the shocks at a P&L level and at a monthly operating cash flow level. Tied with that, and I think it's a point I'll speak later, is then the financing structure. Because when you look at a lot of businesses, one of their biggest fixed costs are financing costs. And so even starting with our own business, Centricity, our biggest cost for long term has been financing costs, interest costs on debt. And so it has been saying, how do we reduce that? And so some of the decisions we took was sort of to pay the debt by selling assets and taking a number of other steps. And I'll discuss in detail what can be done there and what we are supporting some of our businesses to do, so that then even as you go for the business, then at least you generate a positive, you're in a positive cash flow position. Now the third one is balance sheet resilience. And so balance sheet resilience, in a balance sheet you have the asset side and the liability side. Now on the liability side, this is the point I was making, is that you have debt and equity. Now, because we've had a fairly benign operating environment, a lot of operating companies have been able to load on quite a bit of debt on their balance sheets. Now, what that debt creates is that, yes, it's been possible to negotiate moratoriums, and for a lot of the businesses, that was the first thing we did, was engage with our banks to negotiate moratoriums, either of interest or principal or both. But also, I think businesses should also start thinking about the capital structure, whether you want to replace some of that debt with equity. And this morning I was just chatting with the CEO of the EAVCA, and she was telling me there's about 300 billion of undeployed capital that is looking for equity investment opportunities. So there's quite a bit of capital that is targeted for equity investments, and 60% of that capital actually is incidentally is focused on SMEs. And so I think even as you consider debt, also think about equity, because it's important to have a resilient balance sheet so that you can remain in the business and then have a lot of the operational flexibility that you need without the cash flow pressure of monthly debt service obligations. So sort of looking at that. The third point is some of us were caught up, some businesses were caught up in the middle of various investments plans, capex plans. You're sort of critically reviewing those plans and sort of thinking through it, whether they are now aligned with the reality, whether they're absolutely critical, whether they are value enhancing, and whether they can be deferred. The fourth point is on working capital management. And something we really focus on now is not just on sales, but actually the conversion of those sales into cash, and what we can do to support our customers to do so, to be able to have a faster conversion period. Looking at whether you have any non-core assets, and reviewing committed projects. Now, health, safety, and compliance will be a big thing. And the risk here, it was not a big risk before, but there's a possibility after we reopen, there's a possibility if a business is not careful in this area, you can actually get closed, and that will create a whole host of problems. So it's something that in our portfolio management, sort of we are putting top of mind and saying you need to put in place measures, and some of these measures may be even more than what is recommended, to ensure that you protect your staff, but also that you protect your business, because in protecting the business, you're then protecting all the stakeholders who rely on that business. And therefore investing in preventive measures, maybe checklists, PPE, making sure that you've put they are fairly visible for your staff and customers, making sure that you're enforcing them, making sure you comply with the protocols to ensure that you don't lose your license to operate. Because once you do that, the disruption on your business, on your customers, on your supply chain, on your employees, when you come to reopen, when your competitors have been in business, then it's a challenge. It will be a big challenge for you. So this is something really we are thinking about critically, and it's for us, it's an essential thing to do. So long-term survival, I think the last 3 months has been focused on survive. This is not the time to lose customers. So whatever you do, make sure we're sort of trying to make sure you retain your customer, retain your relationships. One of the areas we've not cut costs for a lot of businesses is business development. Trying to find, in fact, in some of the business, we're actually hiring business development people, because we have to find new markets. You're looking for new opportunities, so that when it reopens, then or when you get eventually to normality, I don't know when or how that will happen, you are in a better position than you are before from the marketplace. The second thing is just having a resilient cash flow, and that means looking at all the things you mentioned: the revenue, the conversion, the cost structure, the funding structure. But that sort of is your flow. Then now you really want to do well. So again, is really focusing on your competitive advantage. What are your key competencies? And ensuring that no matter what, that's not where you're cutting. Because if you cut that, you're then cutting the muscle. And that is what gives you an edge in the market to thrive. Looking at what new investments you need to make. So whether it's on the digital push, whether it's on customer side, whether it's on attacking sort of new market opportunities. Those are some of the conversations we are having with our portfolio companies. Our point of view is that the customer really is the lifeline of the business. I engage with a lot of business people, and the major source of funding is banks and equity investors. The way I see it is that the major source of funding for the business is a customer. And so that's one party you need to keep very, very close. To serve that customer, you need your employees who have the relationship with the customer. Again, even as you cut and review, I think sort of critically reviewing what is the risk to my business of losing critical staff at this point in the business. Because if you lose staff who have a direct line of sight on customers, then you are again cutting the muscle. To serve that customer, there are critical supplier relationships. And what we encourage our portfolio companies, that even when you're having problems, be honest with your suppliers, because then they are relying on what you've told them to also do their planning. And in some cases, we've actually had to have back-to-back arrangements with the banks to also support our key suppliers, so that they can remain in business to support us. Then, of course, the bankers. And I think what we are seeing is a more holistic view, especially for the larger businesses, not just focusing on your own balance sheet, but also on support for your partners, both on the route to market side and on the supply chain. Then there's been a lot of work that is being done through various groups around lobbying regulators and working with both county and national governments to see what can be done. And I think a lot of things you've seen being announced. An example is like the recent initiative at Laikipia County, where I chair the County Development Authority, to provide funding at a lower rate for small businesses. And I think you'll see a lot more happening, and also to reduce license fees for small businesses, or to allow small businesses to pay licenses in installments, because the whole ecosystem has to work for one to thrive. What will make the difference? I think one is leadership. I think at this point, each of these businesses, there's been not a point where we're in greater need of quality leadership in business than we are today, given the environment we are in. So high quality management, teamwork. I know it's difficult because we have been working from home, but it calls for high speed of execution, problem solving capability, For us in our portfolio, the decision making is very devolved because you need speed of decision making as well, which is my second point, acting with speed. Cash is important, but sometimes in trying to preserve cash, you may cut the bone too deep. So again, focusing on revenues and just being present in the market. Governance is critical because I think maybe some of the questions we'll deal with is how do you attract equity? And part of what investors find attractive in businesses is the quality of the governance. So the poorer the governance, the more difficult it is for you to attract capital. And that sort of just reduces your flexibility and just reduces one more arsenal that you'd otherwise have had in your armor in this time. I think the final point is this digital transformation, and I think all our businesses are having to go through this. And it's thinking about, do I create a new digital platform? Do I partner? How do I support my route to market on digital? How do I digitize my operations to the extent that I can? I think that's one of the areas that as business people, we're thinking about what we can do to accelerate. So sort of in conclusion, the key takeaways, and this is something that the portfolio management teams are using with management, is sort of a simple checklist which I think will also be available for you to download. It sort of covers the four main highlights: one around demand, revenue, and margins, being very close to the customers, understanding what impact has had on cash collection, understanding where your customers are, to what extent have their needs changed, to what extent can you serve them better, to what extent can you support them, what do I need to do with the product mix, again, route to market. Is your final customer able to still access the product? What do you need to do to support your existing route to market? What can you do around the digital platform? Are there third parties that you can work with to leverage? Liquidity is around what is in your control. How do you generate cash? How do you save the money? Health and compliance, and others. How do I retain and develop my core capabilities over this period? So, ladies and gentlemen, that's sort of a summary of what we are looking at. I want to hand over to Wambua for the next part of the webinar. Thank you very much, ladies and gentlemen.
Thank you, Dr. Moria. That has been quite insightful, and actually, more importantly, very practical, and especially for our attendees and for the businessmen and business people who have joined us. I think a lot of areas where they're able to pick up ideas and see how to implement in their businesses. So we have quite a number of questions coming in. I think the attendees, just to repeat again, you can send your questions through the question tab, and we'll endeavor to answer them. So we're going to have a session where we'll have the panelists join Dr. Moria in answering the questions. So I'll start off with the first question, and it's something that Dr. Moria mentioned towards the end, which is about leadership. So Eric is asking a question using the 4DX analogy of landing one plane at a time. As the CEO looking at the four big bucket solution areas you have shared, which plane would you advise me to land first? So this question will be answered by Dr. Moria around leadership, and of the four bucket areas, which is the one thing that you'd advise to be the first to be focused on?
Yeah, thank you, Mbua. You know, focus is critical, and so sort of 4DX is a principle we use here around execution and its prioritization. So it really depends on what are the specific circumstances of the business and where the impact been the greatest and where the opportunity has been the greatest. So which item, if you focus on from an effort point of view, will give you the greatest impact. So our experience has been that each business has had a different issue. So for some businesses, it is pivoting towards the digital platform. That's the most critical thing. And so all effort sort of is applied there. For other businesses, it's been loss of sales. and demand, and therefore business development and customer engagement. That has been the big issue. For others, it has been health related. So I think the teams need to sit down and say what is critical, be clear around defining what does a picture of success look like, and what are the lead measures that you need to work on as a team to get to close those gaps, and then sort of win one battle at a time, depending on what is most critical for your business at this particular point in time. So choose your must-win battles carefully, because also there's a limit to what you can do now in terms of having too many must-win battles at this, simultaneously.
Okay, thank you for that, Dr. Moria. I think it's clear. The prioritization becomes very critical for the business at this point in time, but still at the same time, which is what we're hearing Dr. Moria say, still with an eye for the future, so that we don't impact on the future adversely as we execute at this point in time. I can see another question here. I'll ask Fred Moremi, the managing partner at Centricity Capital Partners, to help us answer this question. And the question is really on funding. So how can a business ensure that it can attract capital, either from a debt or equity investor during this period? So what can the business do to be able to attract capital, whether equity or debt during this period?
Okay, great. Thank you very much, Wambua, and thanks, James, for the very good presentation. Yeah, so the question on attracting capital, I think I begin by saying ultimately any investor in your business, be it a debt investor, a bank, a lender, or an equity investor, ultimately they are looking to what are your future cash flows to either be able to repay the debt or for the equity investor to get a return on the equity that they've made. So it's critical for a business owner, business manager today to look at what are the free cash flows from operations that are available in future to be able to repay investors. And that's really what investors are going to be looking at. What is the ability of the business to generate cash? I think a very important point that James mentioned is possibly the best funding model is one where the customer is funding the business. We've looked at some businesses where before production starts, a customer needs to have put in a deposit 50%, 100% of the contract amount to secure, which means that from a cash flow point of view, any investor looking at that business can then see a very short cycle from production to when cash is generated. And generally, that's what any investor is going to be looking for. I think the second area, again, is then stress testing your business to see. We're going through a crisis now. I think we made a point earlier in one of the earlier webinars, but it looks like viral pandemics are going to be with us for a while. So even if we overcome COVID-19, there may be another 5 or 10 years. An investor is going to ask themselves, what is the resilience of a business to go through another downturn? So it's important for a business owner, business manager to stress test their business and say, great, I've got these projections, but what if I only achieve 50% of my sales, for example? Am I still able to generate a net positive cash? I think the last one, I think which also James mentioned, which I'll also highlight, is on your governance. I think the more well-structured, less dependent on one man, so there's minimal key man risk. You have a governance system that is independent of, say, the promoters of the business, because ultimately an investor wants to know that when I put in my money into the business, there's a mechanism to safeguard that the use of proceeds of that money is going to go to where it was allocated. And save for any significant disruption, then the chance of getting back my money is high. So investors will also be looking at the governance of businesses. So it's incumbent on business owners, business managers, to see that they have set up systems that are outside of themselves as individuals, and that the business can run even when they are not there. just so that there is less risk posed to the money that's coming in to the business. Yeah, thanks, Wambua.
Okay, thank you, Fred, for taking us through the funding cycle, because I think that's a very critical element, and also as Dr. Moria said, and as Fred has emphasized, at this point it's very critical that not just debt, but we also think about equity. We have another question, and this question is directed to Thomas Omondi, who's our Group COO and a partner at Centricity Capital. It's really around people, and the question is how important or how are you ensuring that staff are engaged and trained or upskilled during this period? Dr. Moria talked about capability, that we have to look at the capability of the people and make sure that we are adapting the people's capability for the business. Thomas, so how are we ensuring that this happens during this period?
Thank you very much, Wambua, and thanks, James, for a very enlightening presentation. One of the things that James talked about was one of the key stakeholders that we need to communicate with regularly is employees. Yeah, but I think what is also important is, which we need to also understand, is that even before a business talks about employees being one of the key stakeholders, because they are part of capital, is that employees themselves are concerned about their health more than anything else. So when we talk about engagement, even before we talk about the side of the business, and I'll come to that, how we are doing it in Centricity, is first of all to make sure that employees are safe, and also to assure them that should there be any issue with their health, we as a business will not abandon them at the hour of need. So they are very comfortable with that. But if I come to the bit of engagement, one of the things that we did, and not just now, before COVID, we had very robust business continuity plans. Now, those business continuity plans, as I explained previously in one of the webinars, also incorporated the input that employees would have. So when COVID came around and the first case was announced, we then assembled as management and looked at the various scenarios and the impact of COVID on people. And we actually found that our BCPs were very robust. So from actually day one, when we decided to work from home, we didn't have a big issue. And what allowed that to happen is that when we did our strategy 4.0, which we are currently in the second year of implementation, we had very, very clear objectives, the 6 pillars that James has spoken about in other fora. And those 6 pillars then were cascaded to the various businesses, and they came up with their own strategies and strategy maps. Those were cascaded down, and each and every employee in the group has very, very clear goals and expected outcomes. And that basically means that we are able to do check-ins because our colleagues are very, very clear on what deliverables and outcomes they're supposed to have. And those check-ins are actually to check on whether we are realizing those outcomes. So those are some of the things that we are doing. But also, we have very regular HR briefings. HR does a lot of briefings to the teams. The various businesses have their own town halls. As a matter of fact, we had our own town hall today for the Centricity Business Solutions to actually brief the business, the colleagues on how the business is doing. So those are some of the things that we are doing to keep the employees engaged. On the bit of learning, which James talked about on the capabilities, we have a couple of online courses that we have facilitated the employees to have access to. So we have some that are being done by the teams in Centricity Capital Partners, where myself and Wambua and the rest of the guys sit in. But we also have LinkedIn Learning, which the colleagues have been using to upskill themselves. So where we are seated as leadership, we are comfortable that the employees are very clear about what their objectives are. They are clear about what would happen in case there is an incident on their health, and they are also been facilitated in terms of their learning. So that's what we are currently doing, Bwana Wambua.
Okay, thank you, Thomas, for that. I mean, people are critical to the business, and the capability and how we handle and deal with people becomes very critical in how the business goes through this period and also is successful in the long run. We have a question here from Anne. I'll direct the question to Dr. Moria. Probably I'll just try and summarize the question. So Anne is asking, there are some sectors that have been adversely impacted. For example, the hotel and leisure businesses. And the question really is around how will you advise these entities to manage their current costs and cash flows? Potentially, given some of them are thinking of winding down, but as you said, the economy is still running, where these businesses have a place in the economy. So really for this one, for the businesses that have been significantly impacted, how do they then manage the current situation where there's totally no business and then prepare for the future?
Yeah, thank you, Mbua. It's true that some businesses have been very severely impacted. And what we've seen is that the impact has been in varying degrees. Some is very high, some is relatively lower. But again, even if I take the example of the hotels, if you go through the checklist went through, the question is, what ideas do you have around stimulating demand? I think if you look at the price points, you know, and even the target customers, what can we do to pivot if you're a hotel owner to focus maybe more on the local market that is available, to look at your price point? Because the thing with a hotel is that you have a physical infrastructure, which is a fixed cost, but you need to generate some revenue to cover your variable costs. So for me, my focus would be just to generate enough revenue initially to survive, to meet my variable costs. So looking at the price point, looking at the product point, looking at what kind of packages one can come up with that sort of makes sense for the market. It is possible we may have a reopening. It's possible we'll have some domestic travel happening within the country. And I think there's still going to be a need for people to enjoy various hospitality services. I think what may not be possible is that if you remain with the model you had from a price, product, packaging perspective, then you may struggle. Again, a lot of, then how do you reach the customer? You know, the digital, what digital model do you have? What's your digital strategy? Then if you look at liquidity and your capital structure, your expense structure is also looking at your cost structure. To what extent can you engage your staff to be on a lower fixed pay and then provide for more variable pay linked to revenue so that you can all work towards generating revenues? Banks have also been fairly accommodative in terms of restructuring some of these facilities. We've seen a lot happening there. I'm aware there are a lot of plans that are planned by the big manufacturers in that particular area to see also what they can do to support hospitality. Government has also announced a number of initiatives, and I think one sort of needs to see what they can do to tap into that, because at the moment you need to survive first and then start thinking about how you thrive. But if I was a business owner there, I would not give up just yet. Sort of, you just have to keep on fighting for your business and get whatever market is available, and at least position yourself to thrive as a business reopens further.
Okay. Thank you, James, for that for the answer on that. We have another question from Rizin, and I'll direct the question to Fred. So Fred, the question is around new business, and within the midst of this Corona period, virus period, I mean, there are opportunities that are coming up. There are enterprising businessmen who are seeing opportunity and want to invest. So the question from Rizin is, how does a businessman find the opportunities available? How do they go through making a proper assessment so that then they are able to properly size up the market and the transactions and be able to come up with a business model and a profitable business venture? Over to you, Fred.
Yeah, thanks. Thanks, Wambua, and thanks, Rizin, for the question. So yes, so I'll try and address it. This is not an easy one. If investing was easy, then I think we'd all be as wealthy as Warren Buffett, perhaps. So I think the business of investing and looking at future opportunities is many times a question of conviction, but it's conviction based on available data in the market today. So an entrepreneur looking to go into a new market, take up a new business opportunity, or maybe it's an existing business looking at a new business model. It's important that you arrive at a business model that is driven by reasonable assumptions. So what is it that you're seeing in the market today, and what do you think will make your business succeed? So for instance, it could be that if I take the example of one of our portfolio companies, Longterm Publishers, which is in the education space, we've now launched a digital platform. We have been testing that platform just to get a sense of what customers are looking for today, and also just to gauge the depth of the market. Because whilst there are many learners in Kenya, we are talking of perhaps well over 12 million learners in primary and secondary schools. It may not be the entire addressable market, or perhaps even the market could even be larger than the 12 million. We're looking at learning. We think of learning being an everyday, ongoing experience at whatever age, and the addressable market is actually much larger. So the first question is, how do you assess your market? What is the addressable market? And then second then is, do you have a compelling product that the market is willing to pay for? And before one can conclude with a business model, it's important to go out and to get real data, what are customers willing to pay for, and then to be able to, if necessary, then to leverage quickly and try out a new product. Like in our real estate business, what we've been able to do, for instance, is before we break ground on any project, we've got to have the product validated and get sales of at least 30% of the units before breaking ground. If that is not achieved, then we say we don't have a good business model. So the secondary is being able to look at, do you have a product that is compelling enough that will cause customers to want to pay for it? And again, to the point made earlier, if you're able to pay for it in advance so that it's a customer-funded model, then you're onto something great. I think the last area that one would then look at very quickly is then what are the capabilities you then require to build around the organization. And it's both employees, they're looking at suppliers, they're looking at relationships with stakeholders, government, and the like, because you might have a great business idea, you may validate it in the market, but then you fail at execution. So the question is, what is the infrastructure you're able to build around the business model to be able to ensure that you have a sustainable business going forward? I think I'll answer like that generally. A tough question, but it is possible. We've seen many businesses start and succeed.
Okay. No, thank you, Fred. It was quite a tough question, but I think you've gone through the fundamental areas in what to look at as an entrepreneur is targeting to start up a business at this point in time. The next question comes from James Njoroge, and I'll target the question to Thomas because it's actually it's a people question, an organizational question. So Thomas, the question from James Njoroge is, how can an organization speed up the operational culture needed to effectively implement some of these levers? So how do we get the staff to quickly change so that then they can adapt to this so that we're able to execute on these levers? Thank you.
Thanks, Wambua. I think when James was presenting, there was something around mindset change, and I think if you look at some of those levers, the one that obviously I can look at is the issues around profitability, for example, as one, and there was the issues around customer. So if I just pick those two, you may recall James talked about the biggest source of funds for any business is actually the customer. So I think if you look at some of the businesses that are there, employees always feel like if we don't have sufficient revenue, which means sufficient cash, we most probably will fall back to financials to be able to finance the business. So in my view, one of the things that obviously need mindset that needs to be changed, or employees need to have a mindset change on, is that the customer is the king. And actually the customer is the one who pays the bill. So that is one of the things that that employees need to have a mindset change on. The second issue, which again James alluded to, was around eliminating waste. And if you look at a lot of the costs that are in the business, they are driven by the behaviors of employees. So for example, the size of office that I'm sitting in might be driven a lot by the size of my ego, as opposed to the practicality of that office. I'm just giving an example. So you'll see some of those costs or that need to be eliminated, which are waste, are driven by employees. So just the mindset that we can actually do more with less is very important, so that employees can actually realize that what they need to do at the end of the day is to generate value for the customer. The third thing that I would say is required in terms of mindset is a solution-based mindset as opposed to a problem-based. So as opposed to walking into your boss's office or your colleague's office taking a problem, you should actually be having been faced by a problem and anticipated the solution with one or two options. So you should be going into your boss's office with saying, hey boss, there is this problem with a particular customer and I have these two options. My preference is option one, but I'm giving you an opportunity to speak, or you keep you keep mum forever. So I think for me, I would say those three mindsets are very important. The first one is that the customer is the one that pays the bills. And at the end of the day, if you talk about cash, it's actually the customer that is critical. And maybe if I just amplify, one of the things about the customer that we must remember is that it's not only about selling, it's about selling and collecting. Because one of the things that we've also seen in organizations is that the salespeople will go out there, they'll sell, and then they worry about credit management to collect. So I think that's something that is important for employees to realize. And then the second issue, which I talked about, is waste elimination. To be able to achieve the objectives of the organization with at the least cost possible. I'm not saying we should go cheap, but we should at any time think about cost leadership. And then the last thing which I talked about is a solution mentality as opposed to a problem mentality.
I think Wambua may add to that. I think you know, a lot of owners today, and I think many on the call, they may be going through a lot of stress about the survival of their business. I think it's very important to communicate openly and honestly to all staff about where the business is and what needs to be done to ensure it survives and thrives. And then to very transparently share the critical numbers so that everybody is on the same page. In a lot of our businesses, we have visual performance boards that say, the scoreboard that says this is where we are, because people like to win. And so people need to know where they are on the critical things that will drive their success or failure, so that it's not left as a responsibility of the owner or of the CEO, but it becomes a problem for everybody and an opportunity. Then you'll achieve some of the things that Thomas is talking about. So just like to add, transparency is critical, especially now.
Okay. Thank you, James, for that, and thank you, Thomas. I think what we are hearing you say is that communication, transparency, mindset, culture, very important and very critical to get the businesses through. And probably as they say, the wise men said, culture has strategy for breakfast. So without a change in culture, then all the strategies that you're doing then will not be executed properly. Something here, we have another question from Mr. Muredi. And Mr. Muredi is asking a question regarding stakeholders, which we'll direct to Dr. Moria. He's asking, how do you deal with key but troublesome stakeholders? So I'd like to rephrase the question probably for Dr. Moria, which is, at this point in time, the businesses have very many stakeholders, whether it's government, suppliers, customers, we've got employees, we've got banks. Just how do you prioritize around the stakeholders, and how important is it to keep the stakeholders appraised to facilitate the businesses to operate and come out successfully? Dr. Moria?
I think Wambu, I think that's an important question. So what we've seen, it's hard to communicate if you don't have a plan. So I think the first thing one needs is to sit back and plan, and not plan to fail, but really a plan to succeed. And then map out who are the very important stakeholders, and then communicate to them. And I think not to communicate to manage them, but communicate candidly, because we're in an environment where everybody understands what the situation is. So for example, if you have a supplier and you don't have their money, don't tell them you're in the process of writing the check. Say the truth. Say, maybe I'm waiting for my customers to pay me, I'll let you know once they. So you need to communicate candidly, but then follow through as the things come through. So so that you can build your credibility with your critical stakeholders, because if it's suppliers, you're relying on them for credit. If it is customers, maybe you're not able to serve your customers now because you don't have critical items or you don't have working capital. It is critical to be very candid. If it is your bank and you cannot pay your loan for whatever reason, I think sit with the RM and again share your plan, say what it is, indicate clearly how they can support you. If it is the staff, again, be very candid with them about the situation of the business and what they can do to contribute, and also seek the ideas, because sometimes you find excellent ideas coming from the people on the shop front in terms of what they can do. Then you have a coherent, plan. Of course, you also have governments, you have people like KRA and others. But for me, I advocate, my view is that be candid, be transparent, and try as much as you can to keep your word. And if you can't, again, let it not be a surprise to your key stakeholders. Please try and communicate in good time, so that then they can manage their situation on their end.
Okay. No, thank you, Dr. Moria. I mean, we cannot overemphasize the importance of communication, as you've said. But for you to communicate, then you must have a plan, which you're communicating to whichever stakeholder you're talking to. We have another question here, and the question I'll direct it to Fred. So this question comes from Anne, and the question really is from an investor perspective. How do you assess valuations of potential target companies whose dynamics are changing with the COVID-19 situation, and some of them are changing permanently? So how do you manage the valuations? Over to you, Fred.
Thanks. Again, difficult questions coming through. I think in terms of crisis like this, valuations becomes even more difficult than it usually is. Valuations are maybe part art, part science. Ultimately, valuations are driven by expected future cash flows and then discounting them to today's value. And the challenge, I'd say, it is very likely that between the capital seeker and the capital provider, that they have a different expectation of what the future will hold, and therefore what is the impact on cash flows. If I just give a very quick example with the COVID-19 virus, I think at the very beginning, some thought it was going to blow over. It was going to take maybe at most 21 days, and then we'll be back at work. It could be some others had a very more conservative view and said, look, previous pandemics, viral pandemics, the least time they've ever taken from beginning to end has been 14 months, for example. So just that gap between 21 days and 14 months, in the context of what that does to cash flows in a business, that makes valuations so much harder. So the one thing that in trying to address that valuation gap or differences in valuation expectations is it possible to come together on what is a reasonable set of assumptions over the next 5 years? Is say 2020, 2021 going to be a bad year, but thereafter we see uptake? Is it going to, for instance, is it going to be a V-shaped recovery? Could it be a W-shaped recovery? It will not be an immediate out. We go back again into crisis because of a second wave. If one is able to come to an agreed set of assumptions, then it makes valuation easier. Where that is not possible, then that is where perhaps some investment structuring then comes into play, where because of the different views one is taking, for instance, the capital seeker may think that this virus is going to be done in a very quick time and it will be a V-shaped recovery. And so they're willing to take a bet on future growth. And the capital provider maybe has got a more conservative view and says maybe it might even be an L-shaped recovery where we are at this problem for a long time. So in such a situation where you're looking at maybe investment structuring, where you're looking at then separating the cash flows, and then the capital seeker could then propose, or the capital provider proposes a mezzanine instrument where there is a certain fixed rate of interest being earned during the term of the capital being provided. And if there is the ability of upside at, say, conversion, if it's going to be a convertible instrument, if the growth comes through, then great. The business owner, the capital seeker, then benefits, because then at conversion, then the capital seeker the capital provider is actually getting a smaller portion of their business because the growth came through. If the bet turns against the capital seeker, the business owner, it means potentially that at conversion, then the capital provider gets a bigger portion of their business at the end of the term. So I think to address the issue of valuation is, it would be great if both sides at the table are able to come to an agreed set of reasonable assumptions. If they're not able to, then perhaps some investment structuring would be necessary. Yeah, thanks. Thanks for the question.
Okay, thank you, Fred. Just wanted to check with Dr. Moria whether he wants to add anything to what Fred has answered on valuations.
Yeah, I was just going to explain that if you are on the side where you are raising capital for the survival of your business, then it's important for you to be flexible, and because now equity is scarce, and there are very many ways of addressing it. I was going to make that point around even using a convertible loan structure, where you can agree on then triggers of conversion, and then agree on what a reasonable valuation basis would be, whether it's on an EBITDA multiple, because the challenge now is determining what the sustainable EBITDA level is going to be and whether it will ever get back to pre-COVID levels. But I think there are ways around it, which enables the business to get the capital now, to put it to work, and for then a conversion to be done when sort of the situation is clearer. So I don't think it's an insurmountable challenge, where there's a desire by the investor to think it's a great franchise, and where there's also a willingness by the party who is the recipient of the investment to see this sort of as creating an opportunity for their business to be more resilient to weather the storm and possibly even to do better in a post-COVID environment.
Okay. No, thank you, James, for that, and thank you very much to Fred and to yourself just tackling the question around valuations. So we have come to the end of our webinar today, but I'd like to thank all the attendees. Today we've had a very robust discussion. We were targeting to come and have a discussion around how successful businesses will look like at the into the future, but we've also ended up having the practical discussions around both how to succeed. We've had discussions around culture, around consumers, around customers, and we've also had discussions around valuations. So today we'd really like to thank you very much for participating in all our webinars. We've had 5 webinars. This was the 5th webinar. Thank you very much for coming out to listen to us, to share with us, and to allow us to share with you our insights. I'd also like to thank the panel in front of you. They've spent a lot of time preparing to share with you as well. There's also a big team in the background that has shared their experiences, our operating companies, who shared their experiences and whom we've worked with to be able to get insights on the ground, which we've shared with you. And we want to thank the teams also from Centrum's investee companies and operating companies. So thank you, everyone. Thank you, panelists. Thank you, Dr. Moria. Thank you, Fred. Thank you, Thomas, for to all of you for the effort and just coming out to share. To the attendees, we want to thank you very much for supporting this, and we hope that you've come out the richer with the experiences and the knowledge. Thank you very much, and we'd like to bring this webinar to an end, and we will share the video. We will share the audio clip and the presentations. Thank you very much.
Thank you.
Thank you.
Great, thanks.
Thank you.
Okay.